I think the lower price point value-based offerings are obviously posting really strong results. We've seen a couple of the companies in more of the middle tier and the upper tier struggling over the past couple of weeks with their results. But I do think if we end up dipping into a recession, having diversification on your business models, having access models, rental models to pair with traditional retail is going to become ever more important for the retailers.
One stat I heard recently, I think it came from some sort of consultancy, is that 40% of consumers have canceled a subscription service after trying it. What is the churn like? And is that still a risk if they're going into any kind of period of time where the consumer wants to pull back a little?
I think churn varies wildly depending on the price to value offering and depending on the assortment and the type of consumer. I think what's most important is that brands are looking at what's my lifetime value that I'm making on the consumer and not fixating so much on the retention. As long as I'm making profit relative to the cost of acquisition, that's a very good position to be in. And I think that also is an indication around why the fixation on revenue on the street and not on the health of that revenue. I think it needs to move much more towards the quality of revenue and much more towards profitability.
Interesting. And what about value? One of the messages we're clearly getting is that Walmart is doing very well, up almost, I think, 20% this year. Target, same thing, up about 25% this year. The bargain basement types offerings also doing extremely well. What is the value proposition for the rest of retail? Or do you just have to get upscale enough where those companies don't have to worry quite so much about it?
I think what we're seeing and where we're playing is really in that middle market space and saying, you know, as brands, you guys make great clothing. You've got a really strong brand and really strong marketing. How can we bring your product to a consumer in a way that she understands there's more value there? And that's where rental or access models become so important. For one flat fee, people get unlimited access. And I think in times, especially if we dip into that recession area, that becomes an even more important lever to be able to pull as a retailer.
And one of the interesting things that definitely benefited the overall retail sales report this morning, maybe even helped Walmart, was Amazon Prime Day. You know, the single timing of that July event is having huge implications. Do you guys even see kind of the halo effect as people are just looking at e-commerce more during the month?
Rental tends to be anti-cyclical. And so times where retail is very strong, holiday season, Amazon Prime Day, is where rental, people tend to take a little bit off the gas on rental, which is why it's a great complement. So in the times where retail is a little bit weaker, whether it's Q2, which we generally see weaker earnings, that's the point in which we see a lot of people coming into a rental model because it just makes more sense than continuing to consume ownership products.